watching Monty TV. I'm Jackie Karsh, joined now by Jeff Thomas. He is the Senior Vice President and Head of West Coast Listings and Capital Markets for NASDAQ. Jeff, thank you so much for sitting down with us.
Thanks, Jackie.
2019 was not the greatest year for the IPO. Why do you think that happened?
IPOs on NASDAQ were up 24% on average. We did have some high-profile IPOs at the end of the year that didn't perform as well. One of the things to look at when you're looking at a business model is everybody wants growth, but is it profitable growth? Do they have a sustainable business model? And at some point last year, investors started to say, we don't want growth at all costs. We now want a path to profitability. And you've seen a number of companies now go out post-IPO and say, we're going to pull in our timelines to when we're going to achieve that profitability. And I think all companies looking forward to a new IPO are saying, here's how long it's going to take us to get to profitable growth.
What about those companies that have already IPO'd? What do we make of them that they're not turning a profit?
Anytime you're building a new market, you're going to have to go through an investment period. One of the great things about the US capital markets is that investors are willing to pay for growth, even in the face of losses, with the eye towards future profitability. And so I think that's why you continue to see a lot of those businesses still very highly valued.
What would you advise those companies about the period before they IPO? What is so essential?
So one of the things we always advise companies is to act as if. Act like a public company for a year, 18 months before you go public. Make sure you can close your books on a good cadence. Get into the use of the cadence of setting guidance, making sure that you can achieve that guidance, making sure you have a good, predictable business model. Another thing we recommend is to hold mock earnings calls with your existing investors so that you can get into that cadence of addressing how the quarter went and then talking about your plans for the future and probably answering some tough questions along the way.
What do you see as the future of NASDAQ in the 2020s?
So one of the big shifts that we're making is to move from just an exchange to a provider of technology and data to the capital markets. We're taking our exchange technology, we're moving it up to the cloud, and we're selling it across different industries to create markets where they never existed before.
What companies do you envision trading well on the stock exchange?
So we've seen over the past 5-10 years, biotechs have really been about a third of the market in terms of IPOs. You continue to see this great appetite from public company investors looking to invest in biotechs versus tech companies that take a little bit longer to go public. The tech companies that do go public and are really successful are enterprise software companies with recurring revenue models. So if you look at somebody who's selling software as a service, anything cloud-based, where they can charge on a recurring basis, they come into the year knowing what their revenue is going to be and they're just looking to add to it.
Would you say you're still bullish on the IPO?
We are cautiously optimistic. At the beginning of this year, we saw everybody rushing to go public before the election because generally in an election cycle, you see more market volatility. Now with the market volatility due to the coronavirus, a lot of people are delaying. Could make for a very busy summer or may not be as good a year as we had hoped.